Hey everyone, how's it going? And it's a few hours after the market closed on Monday, January 27th, and we had quite a day, as you can see there. We opened up this morning way down, a huge gap down, and then for the rest of the day, we did start to recover. So if you're in my Telegram group this morning, I did send out a brief message telling everyone not to panic, that this was within market rhythms, and I said that we would probably find a bottom, consolidate, and then start to recover from here because this was within normal market rhythms. So let's take a look at exactly which stocks did well, which sectors did well. And if you would like to be part of my Telegram channel and get this type of insight in advance of large moves like this, to know whether or not to panic, or know what's going on inside the markets, you can join my Telegram group by going to thetradingpub.com/Kane. And if this video is helpful to you, or if you enjoy its content, I really would appreciate if you like and subscribe to the channel and like the video. So here we go. We woke up this morning, right, gap down. We opened below the MA50, below the EMA20, below the EMA8. We just had hit a new all-time high. Let's go over here and look at our all-time high scorecard. Yes, the most recent all-time high was January 24th on Friday. We did reach a new all-time high on that day. And then what happens on Monday? We got way down below the MA50. And so a lot of people felt that panic and they didn't know what was going on. So why did I say, and why was I very comfortable that this was within normal rhythms and that it was not a rout? Well, so it was the nature of the news. When we have huge gaps like this, like big, huge gaps, that is generally caused by some sort of news event. If it was just like a 1% gapper, maybe 2% gapper, then we wouldn't necessarily be news driven. That could have been overnight's trading. It could have been trading in the Asian markets and the European markets. But for us to gap this far down, that is normally a news driven event. Most news driven events only have an effect on the overall markets just for a couple of days. It has to be something really big like 9/11 or like COVID for the news to keep on affecting the market for an extended period of time. So what was the news that came out? The news was DeepSeek, or sorry, I keep saying the wrong thing, DeepSeek. It was DeepSeek, this AI out of China that was way faster to develop and cost way less to develop than the American counterparts, and so that put a little bit of panic in the markets. So what we want to see is what got hit, what didn't get hit, how broad spectrum was this sell-off, and are there any sectors that did really well or that held up really well, and beyond the sectors, which specific stocks did really well or didn't do very well, and beyond that, which ones recovered very nicely, which ones got a bid and did very well. Actually, we're up today rather than down, rather than gap down and up. So we'll see a lot of relative strength today. And then we want to see the momentum, the number of stocks that behaved like the S&P 500 and did have that gap down, then move upwards. So there's a lot we can learn on a day like this, and it's very exciting. So that type of news, that DeepSeek, this type of news, it's just something that's going to get priced into the market. And the market right now, its job is to rediscover its appropriate price. We thought we were screaming higher, we thought we were doing really well, and then we had a sudden price rediscovery. This was not a black swan event. It is not something where there's a lot of uncertainty, where we don't know what's going to happen next, where we're waiting for even more news to come out. If that were the case, then we may have expected a continuation. That's what I was talking about earlier this morning in the video for the Telegram channel. If for us to pop down, gap down, and then expect that multiple days of that continue forward, there has to be continued uncertainty in the market. Right now, there's no uncertainty. We know that there's such a thing as DeepSeek. We know that it cost a lot less to develop. We know that it could be a competitor of OpenAI. We know all of these things now. There's not that much more that they could drop on us about DeepSeek that would go, oh my gosh, well, it's even worse than we thought, and then gap down to even more. COVID, if you remember, was they announced the shutdowns for 2 weeks, and then there was that gap down, and then we didn't know what was happening next. We didn't know. There was a lot of uncertainty. Where did it come from? Did it come from bats? Did it come out of China? Was it an attack? Was it what? All this stuff that we didn't know. And as we got more and more news, there's just wasn't a lot of clarity and clarification. And then the government said, we're not shut down for 2 weeks, we're shut down for a month. And then they said, we're shut down for 2 months. And then they shut down for a year. And then they shut down they kept on extending it, right? So there was a lot of uncertainty during that time period. We don't have that type of behavior. Or if we look at 9/11, oh my gosh, the towers were attacked and the towers fell. Oh, who was it? We had this terrorism. Was it which terrorist group was it? Then we discovered that the Taliban took credit for it. And then what are we going to do about it? Are there going to be continued attacks? Or are there other places where we're insecure? And then we had the development of the Homeland Security Department, and then all this and on and on. So there is nothing further like that in the case of DeepSeek. It's just, oh, we discovered that there's such a thing as DeepSeek and that it costs so much less to implement and it was so much faster. So is the news, so number one, we're not expecting it to keep on going down. We should find a bottom and find price discovery, which means consolidation for at least another day or two. And then once we are comfortable with where prices should be, then markets will start to move normally again, whether that's up or down. We should get that little bit of consolidation. Now, my personal opinion, now this is my opinion, we cannot take this for fact, but my personal opinion, that we're already starting to see analysts come out and say, hey, it's not as bad as everyone think. We shouldn't have panicked. But that is true. I agree with that. But we want to dig into it and analyze why that might be the case. So, number one, the DeepSeek saying, hey, it took us 2 months to develop, and it took us way less money to develop. That's the normal thing in technology. It would be strange if they said, well, it took us a lot longer to develop and it cost us way more to develop. The way that technology progresses is that everything gets faster and faster and cheaper. Not only the technology, but the development of it. How long did it take to develop the very first space shuttle? The very first computer? And now we get new chips every single month that are better and better and better and better. So, and cheaper to make. Now to make the chip the first semiconductor ever costs like pennies, whereas the first chip ever, I don't know how much it costs, but I would imagine it costs tens, if not hundreds, or not millions of dollars in order to develop and make. And it takes us months or days to make that, though, to develop new chips, whereas the very first chip took years and years and years. So the normal pace of technology is that it gets a lot faster and a lot cheaper, not only the technology itself, but the development of it. So that in itself shouldn't be too shocking. I think it was shocking that that it came out of China, number one, and that they were able to do it so quickly and quote unquote catch up to the technology that we have here in the US. That was unexpected. That was for it to happen so soon. I think everyone knew it would happen, but they thought that it would happen a few months out, not over the weekend. So that was the big shock and drop. So in order to test my theory, we want to see which stocks gap down the same way that the S&P 500, or we'll take a look, it's probably the tech stocks and SMH and all of this. And we want to see if it was broad and all over the markets, or if it was isolated to the AI related stocks. So let's go ahead and do that. And then that will tell me if what I just said was right or not, or at least the market is interpreting it the same way. If it is correct, then This is not a broad-based participation, and we would expect the S&P 500 to resume its trend, which the latest one, well, we're in a big chop. I know some people are going to say it's up. Well, we forget that we only just recently broke this and made a higher high. We were in a series of lower highs and lower lows. We were in this downward channel before until we just very recently last week broke above it and got to that new all-time high. But all of my videos before were talking about how we were trapped inside this large range that was the previous all-time high down to about the 575 level, which was the pre-election gap up. So that's 575. I said between 575 and 570. Those are what we've been talking about for weeks and weeks here, couple months, ever since the election. So this is our large choppy range, and as long as we're inside this range, we are talking about choppy, uncertain, sideways movement. So basically, if we didn't have that news, independent of the news, if we just objectively look at this chart, what we're looking at is, hey, we hit the top of this horizontal channel that Kane has been talking about for a couple months now, and we rejected and we came right back in. So what does that mean? That means choppiness sideways. So my personal expectation is not necessarily that we just recover and just shoot through to new all-time highs. The market has to prove itself to me. I do believe that we are not going to move further down into this channel anytime soon. We do need a period of consolidation after such a huge gap down. I guess I shouldn't say that we need it, but the normal market dynamic would be for us to absorb this for a couple of days and then choose whether they're going to move down or move up. So that's what I need to see first of all. So I wouldn't get too excited about this gap down and say, hey, let's buy up all these stocks and go up, or get too fearful and say, oh my God, we're crashing down. No, right now we're just chopping in this normal range that we've been talking about for many weeks, for a couple of months now. So again, it's not surprising that we move down from here. The surprise is the size of the gap and the nature of the news that caused it. This was not something that was unforeseeable based on the analysis that I've been giving over the last several weeks. But also on Wednesday in my Telegram channel, I gave that warning sign of, let's open up that Telegram and to the appropriate spot. We said that on Wednesday, let me scroll to the appropriate level right here. We can see that on January 22nd, I said, hey, there's warning signs in the market. The SPY is approaching all-time highs, but that can act as resistance. The upward movement was only driven by tech, and RSP was break even. It wasn't really moving. Then we had VVIX and VIX divergence, and we had signs in gamma or gamma exposure that told us that, hey, this could be the top, and it proved to be correct. So markets do move in patterns, and their movements can be very predictable. As long as they're moving under normal circumstances, then they are very predictable. It's only sometimes there are unforeseeable events like COVID, like 9/11, that drive them out of their normal pattern. This particular news event did not drive the S&P 500 out of its normal pattern. It just changed the timeline a little bit. So this movement, perfectly normal and not unexpected. It was just the size and the speed of it, the timing of it may have been, sorry, not the timing of it, but the size and the speed of it was not necessarily predictable, but the timing, the fact that it was coming was, in my opinion, in my mind, foreseeable. So if it's foreseeable, then there's nothing to panic about. There are things that we can do to prepare for it, like the the VIX hedge that I provided to my all access members. So all those people who had a hedge on were protected in this downward movement, and depending on how they took the hedge, then they were protected during this downward movement, or they profited very nicely from this downward movement. So what we want to do is, remember what we said here? We are approaching all-time highs, but it was completely driven by tech. So if all of this pullback is driven by tech as well, everything is peachy, everything is 100% good and normal. But if it's more broad-based, then I might have to eat some of the words that I just said. I might have to dial it back a little bit. Like, oh, whoops, I forgot to consider this. I hadn't looked at this yet, and so now that changes the picture. So let's take a look. How did the RSP, which is the equal weighted SPY, how did that perform today? Did we get this gap down? Let's see, RSP. No, look at that, perfectly sideways trading, perfectly flat. This is like, I can't describe consolidation any better. The high and the low of the day is pretty much the exact same as the last 4 candles. So this is RSP. So basically, it was largely driven by large cap stocks. The largest cap stocks in the S&P 500 are all tech related. So far, everything that I've been saying has panned out. Let's take a look at our Dow Jones. Dow Jones, yes, it did come down initially, but not in a way. It didn't gap super. I guess that is a baby gap, but it didn't gap super far down like the S&P 500 did. And if we look at today's range, yes, it is a larger range than the previous days, but it covered all the grounds that the last 3 sessions did, and we're up. We're not down, and we're perfectly good. So it looks like money was still going in to blue chip stocks. So again, supporting this idea that it was not broad market. Now let's take a look at QQQ. This would be very tech heavy. So I apologize for all the crashing around. That's my cat having the zoomies. So QQQ did gap down below the MA50. It did try to recover, and then it pulled back, and so it closed below the MA50. So that's not looking especially great for the QQQ. So again, it's looking like it's more concentrated in tech-related sectors. Of course, QQQ has a lot of consumer discretionary in it as well. So we'll want to look at things like the QQQE, equal weighted QQQ, see how that compares, and then we'll look at specific sectors. Oh, I want to see small cap stocks as well. So let's look at QQQE. Oh, that didn't, QQQE. Why isn't that pulling up? Let's try that again. QQQE. Let's give it a moment. I may be experiencing some choppy internet. There we go. So yes, gap down, move upwards, but it is right at the MA50, and you can see that the QQQE was in better shape than overall than the QQQ anyways. So it had reached this plateau, this resistance right here, and then we gapped down from here. So QQQ, however, it reached near the all-time highs and then gapped down through everything. So actually I would say normal QQQ is looking a little bit better than QQQE. So we do see some struggle in the QQQE, which means it wasn't just large cap tech that got hit, it was kind of all of tech. So if I look at XLK, you can see that yes, the tech sector did take quite a hit and move down significantly. So right now, let's look at IWM. Yeah, IWM is very much sideways. It's on the lower end of this sideways chop, but it's looking just like sideways, not too far off than the Russell 2000. It didn't have a huge gap down, and there's no gap left over. We did trace back to that MA50 and come back down. So IWM had normal movement. DIA had normal movement. Equal weighted SPY had normal movement. The QQQ, the tech ETF, XLK, QQQE, they did have big gap downs, but the IWM small cap stocks, no, it's just normal movement. So right now, everything that we've seen is isolated into the tech sectors. So we even had blue chips and the blue chips mostly get bid back up, and they actually made a higher high than yesterday, and they actually closed higher than yesterday, or Friday, I should say. So everything is looking okay, perfectly fine. So everything that I started out this video with seems to be completely valid. So let's take a look at our sectors, and then we'll be done for this particular video. Take a look at our sectors. That's not the correct, there we go, sectors. So we can see that we had that gap down in the SPY, but basic materials chopped sideways. IWM chopped sideways. XLI did have a gap down. Home builders chopped sideways, but ended up higher, even though it's still within the chopped sideways range. Gold gapped down a little bit, but not huge. Not all it did was a minor pullback. Then we have the aerospace, same thing, minor pullback. XLF did well. It didn't even gap down. It just basically traded higher throughout the entire day. So financials got really bid up today. Look at that. You would not know that the S&P gapped down wildly just by looking at the XLF. So money was going in to the financial sectors. That's a really good sign. That's healthy. That's what we would expect in a booming economy and in a bull market, that financials are doing well, and that leads the rest of the sectors upwards. So this is a highly positive sign. Let's take a look at real estate. Real estate mostly chopped sideways. We're completely unaffected by the news. The Dow Jones, we already took a look. Yes, initial down, but completely recovered and made it even higher. Healthcare gapped up and went even higher. And consumer discretionary did start lower, but then it moved higher. Consumer discretionary. See that? It gapped down, but then traded all the way up, and its high and its close are very close to this range. So except for the length of this body, you could say, hey, that just chopped sideways. It would be almost picture perfect, just like the RSP. So that also tells me that change in QQQ, since QQQ is pretty much tech and consumer discretionary, well, that hit was all in tech. So as the news gets absorbed and we digest the fact that there's such a thing as DeepSeek and the fact that it was so cheap and blah, 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 the market is going to get more and more comfortable with it, and that helps us lean towards the side of recovery. Over here, consolidate, the market absorbs the news, and then remains optimistic about tech, hopefully, and resumes what it was doing before, which was moving upwards. So overall, so far I'm not seeing any huge risk to the downside, certainly not in the overall markets. Tech seems to be in okay shape. We're going to most likely consolidate a little bit, then most likely resume upwards. That's not super certain, but based on everything that we talked about and that we've seen so far, it's looking okay, looking just fine. We can finish these out. Biotech didn't do much, just went sideways. Communications never really gapped down all that much. It just came back a little bit and then moved up. So it was very specific sectors of the tech that didn't reach out to communications, not like this where it had that huge gap down. And biotech, we already took a look at that. TLT just gapped up a little bit and then didn't really go anywhere. SMH, so it was really isolated to tech and specifically semiconductor AI related tech that gapped down and moved lower. And technically you would say, hey, that's not looking good, Kane. That broke out of a sideways consolidation and looks like it's going lower. It broke below all these moving averages and then kept on going lower. And I'm saying, hang on, hold on to your horses. Just wait for the consolidation to happen or not happen. If it continues moving, then we can talk about movement downwards, but most likely consolidation for a couple of days at least, and then we will see the direction if it goes up or down. I am, because of everything that we just said, that people are going to have absorbed the news and know about it now and still be optimistic about tech, and And that would mean that we would expect that it continues to move higher, but there's not huge conviction behind that. I would put it at like 55, maybe 60% chance, but just a little bit better than a 50-50 chance. Just a little bit higher probability that we'll go higher from here rather than lower after we get a bit of consolidation. Okay, so I hope that helps. I hope that helps you put things into perspective, not panic. And once again, if you enjoyed that content, if it was helpful for you, I really appreciate if you click the like on the video and subscribe to the channel if you care to get more updates like this.